My name is Jim Baroud, and I'm really delighted to have Mario Casabona here for an investor chat. In these days, it's crazy times, perilous times, and one of the segments most affected are startups and entrepreneurs. And that's why I'm delighted to have Mario Casabona with us today. Mario, as many of you know on this chat, is one of the premier angel investors in the region, in the East Coast. I'm delighted to have known him for almost 20 years. And so he can give some good insights, not only as an investor, but as an entrepreneur into what folks are going through and how to plan today and plan forward during this crisis. So I will let Mario talk about his great and fascinating career, and then I'll ask a couple of questions. And then I'll turn it over to the audience to submit questions, and then I will pull some questions from that list, and we can have a nice dialogue with Mario today and get all of your questions answered. So with that, I'll hand it over to Mario. Mario, thanks for being with us today.
Jim, thank you for having me, and really appreciate it. I'm honored and delighted, especially with you, Jim. So what I'll start out with a little bit is my background, my career, and then Jim, as you said, we'll get into some of the questions. So frankly, I need to start by saying that I'm an immigrant from Italy. And the reason it's important is because we have, our country's made up of a lot of immigrants. And it really is a land of opportunity. So that being said, I started my career as an engineer, started working in the defense industry. By the way, I'll try to make it as short as possible, Jim. So started out in the defense industry, Department of Defense, working for a company that hopefully everybody knows called ITT. Was there for a couple of years, then went with a spin-off company. That spin-off company got sold to Raytheon. I then left Raytheon and started electronics company. It's actually the second company I started. The company name was ERI, Electromagnetic Fields and Electroradiation Incorporated. Did that for quite a while, and then reinvented it a couple of times. And what's important, I'm going to mention that during that time period that I had the company, 23 years, I went through the 1979 energy crisis. I went through the 1987 financial crisis. I went through the 2000 dot-com bubble. I went through the 2008 financial crisis. And now we're at this socio-economical, economic pandemic crisis. And the point I'm trying to make right now is that we've been there, not exactly the same, not as difficult, but we've been there in the past, and we will make it through. So whoever's out there anxious and despairing, in despair, don't. We'll be out of it. So when I sold my company to Honeywell back in 2004, that was really my big exit. And that's really what allowed me to start doing angel investing. In 2007, when I left Honeywell, I started Casabona Ventures to primarily to invest in seed, pre-seed stage companies. And it's since then, I'm still investing in companies. I've got about 30 in the portfolio. And I'd like to say that I'm more opportunistic, but in reality, I'm focused probably on IoT, sensor types, med tech, and digital health. So, and that's pretty broad. I'd like to invest with other angel investors, because what I've come to realize is that there's a lot more people that are much smarter than I am. So if I can co-invest with people that are familiar with the industry more so than I am, that would make it much more comfortable for me. And what we look for at Casabona Ventures is companies that have a minimum viable product, have traction, some kind of traction, either revenue or I'll say generically downloads, if you would, viewers, subscribers, but revenue would be great. We look at a management team, an experienced management team. And I think you're going to ask me later on, what does that really mean? But we look for a management team, founders. We look for founders that have skin in the game or have put money in the company itself. I look at companies that have valuations between $5 and $8 million. Again, it's pre-seed and seed. I look for companies that I can provide some value. Sometimes I don't. Sometimes I'm just an investor, and I rely on other lead investors to guide the investment. But I'd like to be a value added, so it's somehow maybe on the board of advisors, board of directors, but somehow get involved, maybe making connections with companies, part of my connections. And then also, as part of my angel investing strategy, I co-invest primarily with an angel group in New Jersey called Jumpstart New Jersey Angel Network. They've been around since, I think it's 2002, and they were founded by several New Jersey local angel investors and some seed capital from the New Jersey EDA and some seed capital from New Jersey Tech Council. So that, in a nutshell, is Casabona Ventures. And then, which I still have to this day and working, and there's probably, again, I mentioned that 30 companies in the portfolio. I've had a couple of good exits. I've had a lot of failures, which is expected. And the portfolio is probably about $2 million. I don't really look at what the valuation is now of that portfolio. All I know is that my sunk costs about $2 million. Then the other thing I did, because I wanted to give back to the New Jersey ecosystem, startup ecosystem, is with the help of the New Jersey EDA and other angel investors, I created TechLaunch, which is back in 2012. It was really New Jersey's first tech accelerator. And we actually, a typical accelerator model where we take some equity, we provide some capital, and then we go through a 16-week accelerator program. And with that, we actually invested and launched 26 companies. After we did the first 3 years, I realized that the deal flow was not as exciting or something that I would want to invest personally. So what I did is I pivoted TechLaunch into a virtual business accelerator. And to this day, we relaunched it back in 2017. We had 6 programs in 17, 5 programs in 18, 4 in 2019. And this year we'll have only 3. It was scheduled for 4. We'll only have 3 because of the coronavirus. And the whole objective of TechLaunch was really mentoring, nurturing, and access to capital, and to also give the selected companies to pitch at an event called the Bullpen. And we give a prize of about $15,000 and also guaranteed pitching to Jumpstart New Jersey Angel Network and the Tech Council Ventures. So whoever the winner is of that Bullpen event gets guaranteed pitching to those 2 investing entities. The other thing is I'm also on several board of directors and several board of advisors. So I keep very busy. I enjoy what I'm doing, and I guess that's it, Jim. If I should add anything else, please let me know.
No, that's perfect, Mario. Obviously, there's so much you've done, and I'm sure that didn't include all of it, but those are some of the highlights. And it's important for people to realize your journey and everything you've done for the community. So we really appreciate that
Thank you.
for all your work over the years. So thank you for that. Now, let's talk about today, right? Perilous times, heading into a recession. Hopefully, it's not as deep as some people forecast. Entrepreneurs are nervous, rightly so. They're looking to ask questions about raising funds, right? That's the most important thing for any startup right now who is in the midst of funding their company. So who's writing checks today?
So people are writing checks, or investors. We are writing checks. So the question is, 3 months ago, we would look at new opportunities, we would do due diligence, and then we would, write some checks. And it takes some time, right? About 2 or 3 months to go through that whole process, from review, screening, to due diligence, until that check is really written. So what I'm realizing, and I'm doing the same thing, is that most angel investors, I'll talk about angel investors, we're primarily focusing on looking at our portfolio companies and figuring out what's their situation. Can they make it through this economic downturn? First thing is, because if they can't, we're going to end up losing our money. And maybe we should, because it was going to go down the tubes anyway. But we look at it and say, okay, does the company that we've invested in, do they have sufficient capital to get them through the next 6 to 12 months? And we're looking at it from a point of view is, okay, if they do, they don't. If they don't, what can we do? Can we write, and perhaps get them through this period? If it turns out that they have sufficient funds for the next 6 to 12 months, then it's a good thing. If they don't, again, what we'll try to do is supplement their existing cash with additional investments. Now, the question comes in is, what is the valuation at this point? The situation, in short, is that probably valuations are going to be lower than what we saw 3 months ago. My prediction is that we may see as much as 10 to 20% lower, and it depends on how badly you need those funds. Now, if you look at companies that are in the biomedical, biotech industry, that's a different horizon time, and also a different investment amount. So I'm looking primarily at tech companies, not at biotech or biomed companies. Currently, VCs and super angels, if you would, they're investing in biotech companies, hoping to find a solution, a near-term solution to the current coronavirus problem. Does that answer the question, Jim?
That is a really comprehensive answer. And I think we'll probably have a few more questions about, say, industries, right? Some industries are more severely affected. You said biotech is a bright spot, but other ones relating to retail, well, I'll let you answer that. There's several industries that are very affected by this pandemic that will be harder to survive and get funding, correct?
Absolutely. Retails obviously are getting killed. Restaurants are getting killed. Amazon is doing very well. Delivery services are doing very well. The ed tech, if you would, is doing very well. FinTech is doing very well. What else? MedTech is doing well. Typically, anything that's consumer facing is in general not going to be doing very well. And hopefully this whole stimulus package, if you get down to some of the nuts and bolts, what you'll find out is that stimulus package, a lot of it, not all of it, a lot of it is really to sustain the retail parts of our industry that we have.
Right. Okay. And what about advice for entrepreneurs that are going through this crisis, whether they have funding or not? What is your give us some general advice, and again, then we can get to some questions as well.
Yeah. So it's the same. Basically, it's the same advice that I would give them pre coronavirus, if you would. And that advice is really to treat the funding that you received like you're not going to get any more funding for the next 2 to 3 years. And I'm not saying that the funding should last 2 or 3 years. You should treat the funding in a very frugal manner and treat it as though you were bootstrapping the company, okay? So pre-coronavirus, I wouldn't really, I would give that as an advice, but I really wouldn't push it. Today, because funding, investments are very difficult to get, still you can get. So my suggestion is the same, basically, is treat what you currently have as far as funding is concerned as though you were bootstrapping, meaning that you're going to be very frugal, very careful how you spend the money, don't go overboard, and think of it as that you're not going to be able to raise capital for another 2 or 3 years. I'm not saying you won't. You probably will. Most likely you will. But right now, during this period, make it like you're not going to be able to raise any further funding.
Great. And so for managing staff and teams and payroll, you would take the most frugal perspective regarding talent. Is that correct? Is there any tips for that in this perilous time?
Regarding talent?
Talent, staff, payroll.
Yeah. So I've got a very philosophical, let's say, thought about this. We got the stimulus package that if you lay off people, there's some benefit to that as unemployment, but most of the people we deal with are probably a little bit beyond that. The retail side, yes, but for startups and professionals, we're probably a little bit beyond that. So what I did, because I had to reinvent my company years ago, what I had to do is I reinvented the company because we had cycles. The defense industry has cycles and maybe a little bit leading or lagging the US economy, but we still had cycles. And what I had to do is in some cases lay off people. In some other cases, I had to take a cut in pay, 50%, and ask my employees to also take a cut in pay. Or, like I'm hearing some other companies doing now, what they've asked their employees is instead of working 5 days a week, you end up working 2 days, 3 days to someone else, and then 3 days yourself, and then 2 days some others. So you're sort of sharing the time in the company, and probably taking a pay cut as well. And the thing though is try to maintain the benefits because that's very important. Being loyal to your employees, as I found out, is very important, is key. And I know most startups maybe have 2, 3 employees, 4. Treat them as family. and make them feel like it and be understanding of the situations they're in, personally and business-wise. But number one, first thing you know is you have to keep your company going. And then number two, you may have to go down to a skeleton crew. But now with the different programs that are available, federal programs, you may be able to keep them employed. And if that's the case, then keep them productively employed, because you want them back when this turns around, and it will turn around. So you want them back, whether it's going to be 3 months or 6 months. You want to make sure that they're happy and want to come back and work hard for you.
Got it. Thanks. Mario, what about the programs from the SBA and EDA? Would the general advice be take advantage of all those programs if you can, as an entrepreneur, as a small business owner, and still be frugal and try to get through this crisis? Would that be what you're recommending? We've both been on sort of calls trying to figure out these new rescue packages or stimulus packages. What's your take as an entrepreneur, as an investor?
So just to back off a little bit, when I had my company, we did over 22 SBIRs, okay? And that's funding set aside, which the SBA, the Small Business Administration, administers. An SBIR, Small Business Innovative Research Program. Most of you probably aware of it. What's great about it is it's non-dilutive, and you can do a lot of development and research with these SBIR grants. The problem with SBIRs is that by the time you get under contract with the phase 1, and then phase 2, and then the phase 3, which is production, it's a long cycle. It may take you 3 to 5 years. Okay. Now, getting more to the immediate situation, the SBA is trying to do a terrific job. I think they've got some very good programs, from payroll continuation to just a lump sum payment of $10,000, loans, and in some cases they're forgivable loans. In other cases, it's low interest loans. The biggest problem we're having right now is that there's such a demand that the sites, the websites, just can't handle the volume that's going in. Same thing with the unemployment. But I would let me go to the EDA now. So you look at EDA, and I'm very pleasantly surprised with Governor Murphy, and I'll be vocal about this. Number one, I think he's doing a great job handling this coronavirus pandemic. He's probably not going with the way some groups may want it, but I think he's doing a terrific job. And he's providing through the New Jersey EDA funding for small businesses, including retails, that I think are fantastic. Particularly, New Jersey EDA, I'm aware of the New Jersey Angel Tax Credit. And it's important because if you're in New Jersey, your investor gets a refund, basically, cash refund or a credit against your tax returns of 20% of our investment, okay? So that's a good program that New Jersey has. And also, if you are a minority woman-owned, there's a 5% kicker to that 20, so it's 25%. And by the way, I was motivated to invest in a type of company that I looked for, which was New Jersey, woman-owned, to take advantage of that particular program. Then there's another program that which the EDA has, which has to do with net operating losses. So if you have losses, you apply it to the EDA, and you'll get some funding back. The other program they have, which is a guarantee program, so that if you're an existing investor, okay, in a New Jersey company, if you're an existing investor and you reinvest in that company, so you have to be a current investor in that company, you can reinvest into that company And the EDA will guarantee, I hope I'm not missing some of the details here, the EDA will guarantee they will guarantee 80% up to $200,000 that they put in. So if you're putting in additional funding, and it doesn't have to be a fund or a group, it could be individual angels. So if you put in up to $250,000, the EDA will match that to 200, not match it, I'm sorry. They'll guarantee it up to $200,000. That's phenomenal. That's just, and we're taking advantage of that with probably a couple of the companies, 2 or 3 companies that I'm currently invested in. There's other programs with the EDA, details, you know, and keep in mind these programs only started 2 to 3 weeks ago, maybe even 2 weeks ago, and they're last week, and they're being launched, and everybody's going on the website, and the EDA and the federal government, the SBA and the loan managers, the banks, they're all learning as we're going on. So number one, I strongly recommend that see if you qualify and apply. And the more attractive those applications are to the company, let your investor know, because that makes us feel more comfortable that you're going to make it through this period.
Thank you for that. And we could send out that link, but if you just Google the EDA website, there's a list of at least a half a dozen programs, which are, as you say, rightly so, Mario, progressive and innovative and looking to help entrepreneurs and small businesses. So before we get to questions, Mario, I just want to ask you, just share one thing with our audience for entrepreneurs, one bit of guiding light advice for them to take away from this conversation.
So besides being persistent and smart and all that kind of stuff, when as an investor, when I look at a company, and I'm not just looking at one company, right? I'm looking at several companies, because at the beginning of the year, personally, what I do is I say, okay, I've got X amount of dollars that I'm going to invest over the year. Okay, so I've got to be careful how I invest the money. So what happens is I'm looking at several companies, and let me tell you, everybody that I've seen has great ideas. And Jim, one of the things I need to mention, as an investor, I really, really enjoy working with entrepreneurs, dealing with entrepreneurs, and let me tell you, I'm learning a hell of a lot what I'm getting out of the whole experience. But in any case, when I look at several companies, the primary decision-making, the primary, what should I call it, thing that I look at when I'm investing in the company. So besides having a great idea, having an MVP, having some intellectual property, having traction, what I look at is the team. The number one, so the discriminating, if you would, factor between one company and another company is the team. I look at the team, the management team. Are they able to execute? Do they know the marketplace more than I do? Do they have company? Can they deal with the company? So to answer your question directly, Jim, I look at the team as the deciding factor when I invest in a company.
Great, thank you for that. All right, let's get to questions. First of all, Esther says hi.
Hi,
she's
Esther.
on board. She's great. She's amazing. Thank you, Esther, for being here.
Very supportive.
So let me start with the one from Matthew. How does the quick collapse of certain industries affect investors' long-term vision 3 to 5 years down the road?
So I have to assume that investors, whether we're seed, early, growth, or friends and family, well, not friends and family, but angels, and then institutional investors, now, you know what? Let me take it back a little bit. Angel investors, because that's probably what I can best characterize. It's a good question. What I look at is investing, so I'm not a short-term investor. So I don't look at the near-term horizon that says I'm going to hopefully get my money back in a year or two. Because if that was the way I invest, then I would be more of a debt type investor. I'm an angel investor. I look at the long view, if you would. I'd like to get my money out in 3 to 5 years. That really doesn't happen. It happens in 5 to 8 years. Okay, sometimes longer, like in one case. So what happens? I take a long view. So understanding that, I've got to look at technology that is post-research and more on the development side, that I would like to think that that type of technology is going to be more applicable and has application in 3 to 5 years. So the market is going to be there in 3 years, 4 years, 5 years. So I'm not looking at the short term where I want to get my money out in a year or two. By the way, if I can, that would be great, but that's not the way it works. So I'm a long-term investor. I look at technology that I hope will have an exit in 3 to 5 years, which in reality is 5 to 8 years. Jim?
I'm sorry about that. You meant along the same lines, other industries like ed tech and some telecom companies like Zoom are booming right now. Do you expect them to go back to normal in a few months as the other consumer industries pick up?
Interesting. So what I do know is the I'll call them high demand industries, currently high demand industries. I think they're taking advantage of the situation in a good way, all right? And they're raising capital, all right? Now, we have to look at the capital pool and say, in 3 to 5 years, is that capital pool going to be the same? The answer is yes. Is that capital pool going to only want to be at what's exciting now? So the answer is, in my mind, is no. So again, even today, we look at what's going to happen 3 to 5 years from now. So Zoom on the market, what was it, a month ago, 2 months ago, was at very low price. I was thinking of investing, didn't think of it. Now I wish I did invest, okay? So is Zoom going to continue the growth that it's had right now? I don't know. You look at Airbnb right now, it's down the tubes. Are they going to come back up again in a year from now? Yes, the answer is yes. Is the cruise industry going to come back? Yes. Are investors going to go into the cruise industry? Yes. So I think things will pick up. Maybe they won't pick up in a step function. I think it'll be more of a trailing, lagging edge, if you would. So it's going to be a slower, we get some confidence in the industry. But yes, I think investors are going to go back into those industries that are not exciting today, and they're really taking advantage of what is exciting today. So the real question is the valuation of a Zoom, for instance, going to be just as high in a year, 2 years from now than it is today? I don't have that crystal ball.
And we don't expect you to, Mario, but thank you for those comments. Patrick has two quick questions. Do you see a focus or exclamation point on B2C or direct-to-consumer business as we move beyond COVID?
So I think the question is, do I see the resurgence of a B2C versus a B2B? Was that the question?
Yeah, I mean, that's probably the best way to interpret it. There is a direct-to-consumer DTC market, which he highlights as well. Are those things, as we look beyond this crisis, will they come back?
Yes, yes. The answer is yes. You know, we keep on hearing from our politicians and economists saying that we had a wonderful, robust economy before this, and I personally believe that we will after this. So the question is not, will it come back? The answer is yes, it will come back. I think it will come back perhaps modified. How we do business, how do we travel, I think that's going to change. Just the fact that, you know, having a Zoom call is much more convenient than having a face-to-face, although that's a whole nother question. I prefer face-to-face, by the way. But this is a pretty good alternative as well. So do I see the B2C or direct-to-consumer coming back? The answer is yes. Will the retail stores be as good as they were? I'm not sure they were that good prior. So I think the whole economy, yes, it's going to come back. Will it come back as the speed of what the politicians want? The answer is, in my mind, no. But it will come back. It may take a year. It may take 2 years for it to fully recover to where we were pre-pandemic, but I really think it will come back. How the companies deal directly with the consumer, that's going to change, and I think it's going to change because of what we've learned based on the pandemic, and I think we're going to have some opportunities. I think startups, they may have to pivot, and if they can't pivot or they don't know how to pivot, then there will be other startups that are going to come into play that'll fill the void and help us with the next generation of B2C and direct to consumer.
Great. Along the same lines, Patrick asks, will early stage proof of concept companies now be far more attractive than a normal startup based on what has happened?
So the answer is yes, and it has been that way for probably for 6 months to a year. I mean, we go back to Jumpstart. We go through a screening process. Jumpstart New Jersey Angel Network. We have a screening process, and the companies we look at, and we give top priority to are companies that have what I refer to a minimum viable product or prototype. Now, keep in mind, we don't expect a seed or pre-seed stage company to be ready for production, right? And that's why you need investors. And we don't expect that seed to pre-seed to do a full-blown marketing effort, and that's why we provide the capital. So I think preference has been given to companies that have had MVPs, minimum viable products, or proof of concepts, and they've had the highest availability of funds. I think that's just going to continue. I'm not sure it's really going to change that much.
Okay. Here's a question from someone we both know who will remain nameless, but it's a really it's a good question, and I think other folks will be in the same situation. So here it is. I have been bootstrapping for the last 12 months and intended to push hard on a capital round starting March 15th. I have paused this effort. Should I plan to continue bootstrapping for the next 6+ or so months, or should I pick up the capital raise? I am pre-revenue.
Wow. Okay. So my suggestion is number one, continue bootstrapping, right? Just continue doing that. Even if you're going to go out and do a capital raise, you're going to have to keep the company going, because it's not just a matter of going out there today and saying, okay, here's my flag. Now I'm looking to raise $250,000, $500,000. It's going to take you 2 to 3 months to raise that capital. So suggestion is continue bootstrapping. Depending on the industry you're in, okay, I would start doing a capital raise. When I say capital raise, go out there, start getting to know the investors, start circulating your executive summary. Don't expect to get any significant hits, okay? Use this as a learning experience, but I would continue bootstrapping, and I would go out there and at least put your toe in the water, and again, it depends on the industry. But again, bootstrap, and don't expect to raise capital for another 3 months at least. I would again put out some feelers as to what investors like and don't like. Okay.
Great. Thank you, Mario. Here's another very detailed question, and one that's pretty special, actually. It's from Raj. I have a B2B validated marketplace for steel. We did $100,000 GMV, gross merchandise value, in the first month, and 2 million GMV in 7 months, and have revenue. I am raising my seed round, and the question is, how do I do that without having a VC as a cousin?
Wait, what was the industry? What was the product?
Steel, the marketplace for steel.
Steel, S-T-E-A-L?
No, S-T-E-E-L.
Wow. So there, I guess there is a, once we cut off trade with China based on this pandemic, there may be a great opportunity for steel. So, so the question I have is, is it steel manufacturing, or is it the use of steel to develop a product? Wow. So you're basically in the manufacturing arena. That's a good question. So so interesting. So look at. So you mentioned that you have a 2 million GMV. If that's the case, that means you have a backlog. So I would, that's the way I interpret it. What I would do is go back to my customers and find out if they're solid customers. Because if you go out there and start looking for capital, the VCs are going to ask you to verify that the back orders that you have of 2 million, which is pretty good, verify that, and that your customers they're going to abide by the contract or commitment they have. So I don't, so the way to get around, okay, good point. What I tell some other companies, not in the steel business, I'm not in the steel business, the best way to probably raise capital, and it's going to be difficult, is to find that VC, and I don't know if you're a Series B or C, but find that VC that understands your market, understands the steel industry, and the potential and the value that you bring to the market. Because, for example, a typical VC is going to look at steel and say, you want to do some debt financing? Okay, that's possible based on your receivables or your backlog or your cash flow. But if you're looking for a VC type investment, equity type, or it's equity, then you've got to really look for a VC that has the same knowledge and understands your marketplace. So it's a very focused search that you would be doing for a VC. And if you know somebody at Goldman Sachs that loves to invest in steel, have at it.
Here's another question, Mario. This one might be out of your focus area, but I just thought I'd ask it since you are all-knowing.
Steel.
From steel to machine learning. Although retail will be down through the third and fourth quarter of this year, how do you see machine learning applied to targeted marketing?
Interesting. So machine learning, AI, and probably individuals that are in the industry, developers, they probably know the real difference between AI and machine learning. I have an overview of it. It's interesting. I think for the B2C, I think machine learning, which is in my interpretation more like artificial intelligence, I think that'll be in the upswing. It's not clear to me how machine learning is going to be effective in B2C or B2B. And I'm probably not that familiar with machine learning, just like quantum calculations. So I don't know how to answer that, Jim. How do you like that?
No, that's fine. That's fine. We're going to close this up. We have just a couple more questions. There are all these stimulus packages, right? We've already said we're probably heading into a recession. Some pundits are predicting an even worse recession than the Great Depression, right? But this person wants to know how angels and VCs respond to that. And I think you've touched on this before, how startups can prepare for this by conserving and having enough cash for the long haul. But the specific question here is, in general, how would you say that angels and investors in general respond to what we're going into right now?
And I'll respond to that. Is what I'm doing is, again, I'm fortifying my existing investments. I'm still looking for potential new investments that are really way beyond my expectations, because right now I've got to keep some capital in the sidelines, although I want to deploy it. I think we're going to be out of this recession. I hope we have a speedy recovery. It'll be good for everybody's 401k and everything else, including mine, my investments. But I think it'll be about a year or so before it comes back. I think most angel investors are bunkering down, if you would, hunkering down, probably for the next 3 to 6 months. And we're going to be looking for daylight, hopefully in 6 months. Now, keep in mind, everybody brags about we're in a tunnel and we see daylight. Just keep in mind that we're still in that tunnel. Once we hit daylight, then we're out of the crisis that we're in now. And I don't see that from the investor. And, keep in mind, investors are looking to the future. So I don't see us looking into the real future for a good 6 months. So that's why I'm pushing for being frugal and watching the capital and that kind of stuff. Jim, does that answer the question?
I think that does. Thank you, Mario. And I think we'll wrap this chat up with that comment. I want to let everyone know that I will send an email out with those links, as well as how to contact Mario, because some folks have questions and want to follow up. Also, there will be a recording, and we'll get that out to you as well. So I'd like to end it with something I've been doing on these Zoom chats, is asking our speaker to read a poem for us. So why don't you close us out with a poem, Mario?
Okay. So Jim, as I mentioned before the webinar, that you got me thinking. I'm usually not. I don't really relate to poets and touchy-feely kind of stuff. Although personally, I think my wife would say that I am. But I got two things. I have a poem, and then also I have a quote. So this poem is about dreams, and hopefully it's short enough. And here it goes. Hold fast to your dreams, for if dreams die, life is a broken winged bird that cannot fly. Hold fast to your dreams, for when dreams go, life is a barren field frozen with snow. So as an entrepreneur, my own interpretation is you have these ideas, you have these motivations, and you have these dreams. Follow your dreams. And you need to have these dreams to move on in life, whether you're 10 years old, 20, 50, 70, 100, if I ever make it. And so hold on to those dreams and fulfill those dreams. Don't let them go. And those dreams evolve as you get older. The other thing is a quote from Reid Hoffman, who's the co-founder of LinkedIn. And here it goes. No matter how brilliant your mind or strategy, if you're playing a solo game, you'll always lose out to a team. That's it.
That is beautiful, both of those, Mario. Thank you so much. And actually, my 12-year-old daughter is in the background listening to that and says, and is jumping up and down and says, I know that poem.
Oh, no.
So, I mean, that's a great, no, that's really lovely. And I just want to thank you again, and I want to thank you for your leadership for the community.